Good morning, good afternoon, good evening, depending on where you're connecting from. Good morning. How's been your week? How's been your week? If you can hear me loud and clear, please let me know in the comment section. Confirm there are no noise in the background. Confirm there are no noise in the background. Also confirm you can see my screen clearly. You're welcome. You're welcome. If you have any question, if there's any play you want me to analyze, let me know in the comment section. If you have any question or any play you want me to analyze, let me know in the comment section. You all are welcome. You're welcome. You're welcome. Drop your questions in the comment section. I want to believe you all can hear me. Can you all hear me? Can you all hear me? Can you all hear me? Can you hear me? Can you hear me? Can you hear me? All right, all right. Thank you, Mr. Badamosi, Mr. Sampson. Okay, GBP USD, Euro USD. All right, all right, all right. We'll look at all. We'll look at all in a few minutes. I want to believe you all can see my screen. So we'll start by looking at let's start by looking at dollar index. Okay, dollar index. Let me see the weekly. Okay, so let's see daily. Okay, okay. Now, if today's candle, closes as a shooting star, we should be considering dollar. Okay. If today's candle closes as a shooting star, we should be considering selling the dollar tomorrow. Now, remember, tomorrow CPI data will be released tomorrow. So personally, today I wouldn't be trading the dollar. I wouldn't be trading dollar pairs today. I'm avoiding dollar pairs today. I took a trade on GBP USD yesterday. I've made so much profit on GBP USD card. Also, I made little profit on USD card and also USD CHF. So today, I wouldn't be trading the dollar pairs. Okay, I would want to wait for today's candle to close. Okay, the close of today's candle will determine which direction I would follow tomorrow. Okay, so that's my take for the dollar for today. Today, I'm not buying, I'm not selling the dollar. Okay, now let's see what's playing out on the dollar. Now, after the formation of this candlestick, I think a fair value gap was created. I think a fair value gap was created. I think a fair value gap was created after the formation of this candle, and that could be the reason for this retracement. I shared this with you guys, I think on Monday. I shared this with you guys on Monday that I'm expecting price to pull back to fill. I think a fair value gap was created after the formation of this candle. Let's just confirm on lower time frame. So you can see this fair value gap that was created here. Can you see? Okay, price has not filled this fair value gap. We had this fair value gap here. You can see price just tested this fair value gap. Now I would expect that this high here, okay, this high has become an area of liquidity. I would expect that price will pull back to come and clear the liquidity because they know a lot of retail traders would have executed sell after the formation of this candle. If you go down to 1 hour and 15 minutes time frame, I'm sure you'll be able to identify a bearish reversal pattern on those time frame. Let's see. So you can see this shooting star. You can see the shooting star candle that formed here. And most retail traders would have jumped in now to start selling the dollar. So there's a high probability they would come sweep the liquidity residing at this previous high before going bearish. Okay? If they don't do that today, tomorrow probably they will use CPI to come and clear the liquidity residing at this previous high. Okay, so that's my expectation. The dollar is still bullish at the moment. It is still bullish at the moment. The sells is not confirmed yet. Dollar in, they are still going to come clear the liquidity residing at this previous. It is not set for sell. Okay, you look for sell after this liquidity. If this liquidity at this point is not cleared, don't sell dollar. If they don't clear this high, don't sell dollar. Okay, so that's my take on the dollar. Dollar is still bullish. It is still bullish, but I don't think it's the right time to sell dollar. I don't think it's the right time to sell dollar. I don't think it's the right time to sell dollar. You can see if you're working with 15 minutes time frame, this previous swing high to swing low, you can see this swing high, swing low. If you apply your Fibonacci from this swing high to swing low, this is a discount area, and you don't sell at a discount area. You should be looking for buys at discounts. And you can see on 15 minutes, it has created a fair value gap here. So there's a high probability they will come fill this fair value gap. So dollar is still bullish at the moment. There's a high probability. I think a fair value gap was created after this candlestick formed, and that could be the reason for this retracement. Let's see. Let's go down to 5 minutes. Okay, so you can see on 5 minutes we had a fair value gap here, which could be the reason for the retracement. You can see price tested this fair value gap. Okay, so if you want to buy dollar today, and you can see on 5 minutes, shift in market structure has occurred at this point on 5 minutes time frame. Shift in market structure, then want to wait for price to pull back to a discount area before you buy. So if you want to buy dollar today, wait for this low to be cleared. This low here. A lot of retail traders that have jumped in to start buying, and their stop losses is residing at this low. And you can see that they didn't fill this fair value gap. This gap was not filled. This is a trap for retail traders. So there's a high probability they will come and clear the liquidity residing at this low before buying. So if you want to buy dollar today, patiently wait for this low here to be cleared. Okay, look for buys after this fair value gap gets filled. Wait for a bullish reversal pattern to form, then you look for buys. Okay, that's my take on the dollar. Good morning, Mr. Joseph. Good morning, Mr. Atoda. Good morning, Mr. Godswill. If there's anything you want me to analyze, please let me know. So my take on the dollar for today's market is buy. The dollar is still bullish. The dollar is still bullish. That's my take on the dollar. Okay, so let's look at yen basket. Yen basket. Let's see yen. Let's see the yen baskets. Okay, for yen baskets, let me see the. Okay, like I shared with you guys, my bias for the yen is bearish. I expect price to pull back. Okay, I told you guys yesterday I would like to see price pull back to fill this value gap. Okay, price is likely going to pull back to fill this fair value gap. Okay, this fair value gap. Okay, I think price has tested that gap. Okay, but it has not filled it entirely. Let's go down to 4 hour. Okay, good. Okay, so you can see price has tested that level. Price tested that level, I think, yesterday. And today also they've tested that level. So they might, want to come and fill this fair value gap. They might, okay? But also you would see that we had the resistance here. Price penetrated that resistance and there was a strong rejection from that. So let's see the pattern we have of 1 hour and 15 minutes. It's a bearish reversal pattern. So I think JPY yen is set for sell. Okay, I think it's set. You can see the pattern we have here. You can see the pattern we have here, and you can see it's created a fair value gap here. So price might not come fill this gap. It might not get to this zone. Why? You can see on 1 hour time frame, we had a fair value gap here. and I think that gap has been filled completely. You can see. You can see it has filled that gap, and also the market is trading below that. Okay, it has not closed below that zone. Okay, so you can see that. You can see that. So I think yen is bearish at the moment. It's bearish. It is bearish at the moment. Yen is bearish at the moment. Okay, so on 15 minutes, you can see the fair value gap on 15 minutes. This is the fair value gap on 15 minutes. That gap has been filled, and the market is trading below that zone. And there was a confluence here. You can see this confluence. You can call it your resistance turn support. Or, yeah, support turn resistance, right? You can see this here. It's a confluence with this, and this is also a mitigation block. You can see this is also a mitigation block, which is in confluence with this fair value gap. You can see that. So this is a sell setup on yen. This is a sell setup on yen. So if you are considering trading JPY pairs, you should look for buys on JPY pairs. Look for buys on JPY pairs. JPY is likely going to come for this low. The liquidity residing at this previous low. That's my take for yen for today's market. That's my take for yen for today's market. I hope that is clear. I hope that is clear. Today I said I will be teaching you how to use the ATR indicator to determine market volatility. Maybe before the end of the class, I will try see if I can cover that. If I can't do that today, then maybe tomorrow we'll look at the ATR indicator. Okay, I really don't like teaching indicator, but I know some of you are new to trading, and as a beginner, you might, have to start using indicators. Okay, because there are some things we can see without indicators that you as a beginner will not see. We all started with indicators. Okay, so I'll teach you guys how to use that indicator. Indicator is not my thing, but as beginner, I think you need it. You need it. Okay. BTC. Rotesco, you are trading everything. You are trading everything. BTC, oil, everything. Okay, we'll look at that. We'll look at that. Okay. So we'll look at that. So let's look at we've looked at yen, and so today let's look at the fundamentals. Today there are no major news, right? There are no major news today. No major news today. I think a low impact news, medium impact news was released for GBP this morning, and that is the reason for that sell on GBP USD, GBP JPY. You can see the negative news for GBP, average earning index and claimant count change. It was negative for GBP this morning. That's why GBP was weak. The news was released 7 a.m. Nigerian time. That's the reason the what's it called? GBP was weak this morning. I really don't look at this medium impact news. My focus is on the high impact news, but I think this news influenced price action this morning. It influenced price action this morning, and by 9 p.m. Nigerian time, Trump will be speaking. Okay, that's the president of the United States. He would be speaking by 9 p.m. and this news would most likely influence price action. This news by 9 p.m. So when you see high volatility from between 8:30 and 9:30, just know that the president of the United States is speaking. That will be the reason for the high volatility you might see later in the day. Okay, so tomorrow is CPI. So if you are trading the dollar pairs today, you should be conservative. Tomorrow is CPI. This is one of the major news you don't want to joke with. This CPI, Consumer Price Index. Okay, so if you are trading the dollar pairs today, don't aim for too much, so that before the market close for the day, the market would have hit your stop loss or your take profit. Okay, if you can make 50, 60 pips on USD pairs today, fine. Your risk should be between 30 pips, maximum 30 pips. Okay, so that's it. Then on Thursday also we have PPI, which is also a major news. Then GBP will be releasing its GDP data on Thursday. Okay, so let's go back to the chart. Let's start by looking at GBP USD. Okay, Euro USD, GBP USD, Euro USD. Let's start with GBP USD. GBP USD, like I said, the dollar is still bearish. No, I said the dollar is still bullish. It's still bullish. So you should look for sales. Okay, look for sales on GBP USD. Look for sales on GBP USD. Look for sales on GBP USD. After the close of today's candle, then one can consider looking for buys on looking for sales on GBP USD. Okay, so it has created a low here. Probably if ever gap was created here, let's go down to 1 hour. Let's go down to 1 hour. Okay. Now, if you want to risk buying GBP USD, wait for the current 4-hour candle to close. Okay, wait for the current 4-hour candle to close. Let's see 15 minutes. I'm avoiding dollar because of CPI that will be released tomorrow. Okay, so if you want to buy GBP USD today, wait for the current 4-hour candle to close. Okay, because if we apply our Fibonacci, let's say we take it from this swing low to this swing high, price is currently at a discount area. It is at a discount area. Okay, it's at a discount area. Okay, then on 1 hour we have pattern that looks like a bullish reversal pattern. This looks like an hammer, right? It looks like an hammer. Let's see 15 minutes. Okay, so if I want to take this trade, just that I don't want to trade USD pairs today, if I want to check this trade on GBP USD, if I want to take a buy trade on GBP USD, I would like to see price come through this fair value gap. Okay, those of you who are considering buying, if you want to buy, you could patiently wait for price to come and fill this fair value gap. You can see this fair value gap is in confluence with this resistance turn support. So this would be a good zone to consider buying GBP USD for those of you who want to buy. And if you are buying from this zone, you set your stop loss. You can just use maybe 20 pips as your stop loss. 20 pips as your stop loss. Your take profit, you could use 30 to 40 pips as your take profit, 30 to 40 pips. Okay, so that's my take on GBP USD. Okay, that's my take on GBP USD. But like I said, my bias is still the GBP USD. My bias on the dollar is still bullish for today's market. It is still bullish. Okay, it is still bullish. And if dollar is bullish, then we should look for sells on. You can see what we have here is a sell on. Sorry, this is USD sorry. Okay, so you can see on 4-hour time frame. Okay, so we had a shooting star here on 4-hour time frame. Please, guys, I think the analysis I did, the first analysis I did, I think it was on USD and not dollar. I think the analysis I did, the first analysis I did, it was on USD You guys didn't correct me. I think it was on USD not on dollar. Good morning, Mr. Joro boy. Good morning. We're looking at USD and not US dollar. And you guys didn't correct me. This is USD, this is dollar index. D1. This is dollar index. This is dollar index. The first one I did was I think it was USD not dollar index. Okay, so this is dollar index. Let's see. So this high here, I'm sure they're going to come clear these highs. These highs, you can see this is an area of liquidity. You can see there's a high probability they will come and clear this high. That's why I said the dollar is still bullish. It is still bullish. Dollar is still bullish. Still bullish. I think the sell we saw this morning on GU, that sell we saw on GU was as a result of the news, the GBP news that was negative. I think that was the reason. So we had a shooting star here. A lot of retail traders would have entered sell and their stop losses would be residing at this previous high. That's the reason I said there's a high probability they would come for these highs before going bearish. Okay, so so what we have here is this is a bearish setup now. They might want to push price down. You can see this fair value gap here. Okay, they might want to come and there are a lot of stop losses residing at this previous low here, this low. Okay, so there's a high probability they might want to come and fill this gap. Also, I think we have a fair value gap here also on 1 hour. There's a fair value gap here. Though price has tested that area the first time, at this point, this got filled. They might still want to come and test this area. Okay, so that's my take. Expect dollar is likely going to crash down to this zone. Okay, dollar is likely going to crash down to this zone, which means you can sell dollar to this zone. Okay, you can sell dollar to this zone. Then you look for buys on GBP USD, Euro USD. Okay, that's my take on the dollar. I hope that is clear. I hope that is clear. So that's my take on GBP USD. You want to buy, patiently wait for price to pull back to this zone before you buy. Let's look at Euro USD. Euro USD. Euro USD, let's start with daily. Okay. So yesterday, price tested this resistance. Price tested this resistance. If today's candle closes above this support, if today's candle closes above this demand zone, or you call it your support zone, then we should expect buys on Euro USD tomorrow. We should expect buys on Euro USD tomorrow if the market or today's candle closes above this support zone. Look for buys tomorrow. And if you are buying tomorrow, your first target will be this high. Okay, so let's go down to 4 hour. So the previous candle closed as on the previous 4 hour candle closed as an hammer after sweeping liquidity residing at this previous low. Okay, so let's go down to 1 hour. Okay, we had an hammer here. See that we had an hammer. Then let's go down to 15 minutes. Okay, so if you want to buy Euro USD, you can see fair value gap has been created here. Patiently wait for price to pull back to this fair value gap. Okay, you can see we had a fair value gap here. This was a trap for retail traders. The impatient traders would have jumped in to start buying from this point. After the formation of this hammer, what they did there was to fill this fair value gap. Okay, you can see, so this low became an area of liquidity. So there's a high probability they will come for this low. This low. So before you buy, wait for this low, wait for it to be cleared. Okay, if you want to buy, wait for this low to be cleared. It's coming here. It's going to come clear this low. After this low gets cleared, just wait for a bullish reversal pattern to form on 1 hour or 4 hour time frame. Then you can buy Euro USD. It's that simple. It's that simple. Okay, just wait. It will come. It will come. Clear the liquidity reside at this previous low. All these lows are area of liquidity. There are a lot of stop losses residing at these lows, and it's going to come for them. I hope that is clear. So wait for price to pull back to that zone. Okay, so which other instrument do you want us to look at? Let me see. GBP USD, Euro USD, done with that. Which other instrument? UJ. Okay, Mr. Emmanuel, UJ. Let's see UJ, yes, UJ. Okay, UJ. Okay, so let's start with the daily time frame. UJ cleared high of yesterday, which was an area of liquidity. Okay, UJ cleared the high of yesterday and last Friday, which is an area of liquidity. So let's go down to 4 hour. Okay, so this is what we have on 4 hour. So I think UJ is still bullish. Okay, UJ is likely going to buy. This is where I'll be considering selling UJ. Okay, UJ is likely going. You can see what they did here. You can see they just tested this zone. They tested this zone. And if you go down to lower time frame, maybe 1 hour or 15 minutes time frame, you'll be able to identify a bearish reversal pattern on those time frame. You can see. So this is a trap for retail traders. A lot of retail traders would have sold and their stop losses will be decided at this previous high. So with what we have on 1 hour, 4 hour, you should buy UJ. You should buy UJ. Buy UJ. Let me go down to 15 minutes. You can see if you apply your Fibonacci from this swing low to this swing high, price has pulled back to a discount area. You can see, and at this discount area, we had this fair value gap. Though it has been filled at this point. If you look at the time, I think this was late hours of the day. You can see this was in Asian session. This was in Asian session. So this morning they pushed price back, I think, to clear the liquidity residing at this low. You know, a lot of retail traders would have jumped in to buy from that point. Yes, if you had bought from this point, by now you should be out, right? You should have made so much profit. But the greedy ones will still be holding that trade. The greedy ones will still be holding that trade. So I think what they did this morning was to come clear the liquidity residing at this low that they have achieved, and they're about to push price up. So my bias for USDJPY today is buy. It is buy. It is buy. Okay, it is buy. Let's see 5 minutes. It is buy. So we had a fair value gap here. You can see this fair value gap. You can see this fair value gap. Price has pulled back. So if you want to buy UJ, you could just wait for price to pull back. Okay, to fill this fair value gap before you buy UJ. But look for buys on UJ. Look for buys on UJ, not sells. Look for buys on UJ. Patiently wait for price to pull back to fill this fair value gap. And set your TP. You can set your TP using this high, or you can use this fair value gap here. You can see this fair value gap, which is in confluence with this mitigation block. This fair value gap, you can see it's in confluence with this mitigation block. So this will be a good area to set your TP. So if you are buying from this point, set your stop loss. You could just use 20 pips, which will be several pips below this level. 20 pips, your TP. Okay, this is about 57 pips. You are risking 20 pips for 50 pips. That's a good risk reward. That's a good risk reward. All right, we'll share good. We'll definitely share good. Okay, so that's it for USDJPY. Look for buys. Look for buys. If you have what's it called? If you have good capital, if you're trading above 0.01, if you can trade above 0.01, there's nothing wrong. You can trade, you can go in now. Okay, set your stop loss. So if you are taking the trade from the current market price, your stop loss should be 10 pips below this level. So your stop loss should be like 40 pips. 40 pips, you can go in with 0.01. And when price pulls back into this zone, this area, you go in with 0.01. Let's say the lot size you use is 0.02. You can go in with 50% of your daily drawdown. Okay, let's say you are risking $20 for the day. You can go in with $10 on this first trade. Then if price pulls back to this zone and a bullish reversal pattern forms, okay, you can now take another trade, because you know everything about trading is probability. There is no guarantee that it's going to come fill this fair value gap. So you can just go in with partial risk so that you don't miss the move. Price can just settle keep going up from the current market price and just come into this zone. So it's best you go in with small lot size. Then later on, if price comes to your point of interest, you go in again with more lot size. I hope that is clear. That is clear. Okay, so that's my take on UJ. Look for look for look for buys. Look for buys on UJ. I hope that is clear. Please, if you are yet to give the video a thumbs up, give it a thumbs up so that others can get to see this video. And if it's your first time joining this live stream, just subscribe to the channel so that anytime I come on live or drop any content, you get notified by YouTube. Okay, so that's my take on UJ. Which other instruments? Let's look at gold. Gold GJ. Okay, gold GJ. Let's look at gold. Yes, gold. Okay, gold. Gold. Start with the weekly. And bias for gold still remains bullish. No, gold will come for these highs. Last week high has not been cleared. Gold is likely going to go for these highs. You can see what we had here. We had a fair value gap here. And there was a strong rejection. You can see there was a strong rejection from that fair value gap. You can see it. You can see there's a strong rejection from that fair value gap. So gold is likely going for these highs. Okay, it's likely going for these highs. Let's go down to daily. Let's see daily. So this morning, see what has played out. Okay, the weekly. So what has played out on the weekly time frame, I think they've cleared the liquidity that was residing at the low of last week. I think they've cleared that. Yeah, I think they've cleared the low that was residing at the low of last week. This was last Friday candle, Monday, Tuesday. The liquidity residing at the low of last Friday, you can see it has been cleared. And I think this was the first candle for last week. Yeah, first candle for last week. So this was the low for last week. And I think they've cleared the liquidity residing at this previous low. This is a buy. This is a buy on gold. Okay, this is a buy on gold. I remembered on Monday, I told you guys I expect gold to come and fill a fair value gap before going bearish. Okay, so I think it's the right time to buy gold. This is a buy on gold. Now, this is daily time frame. After the close of yesterday candle, let's go down to 4 hour. This is a bullish reversal pattern. Let's go down to 4 hour. If we are able to identify a bullish reversal pattern on 4 hour, then we should be looking for buys on gold. Okay, so this is what we had on 4 hour time frame. You can see this. This is what we had on 4 hour time frame. This is a strong bullish candle. This is a Marubozu candle. Now, after the close of yesterday candle, a fair value gap was created. Price has pulled back this morning to fill the fair value gap. Let's confirm on a lower time frame. That's the reason for the pullback. A fair value gap, I believe, was created on a lower time frame. And you can see we had the fair value gap here. You can see this. You can see this. If you go down to lower time frame, this is 1 hour. If you go down to 15 minutes, I'm sure a fair value gap was below this 1 hour fair value gap. That's the reason price broke out from this 1 hour fair value gap. Let's confirm 15 minutes. So on 15 minutes, I'm sure there's a fair value gap below on 15 minutes time frame. Okay, this is 1 hour fair value gap. Okay, there is a fair value gap here. Though that fair value gap got filled at this point, I think price had to retest that area. You can see we had a fair value gap here. You can see. So that could be the reason price broke out from. You can see. That could be the reason price broke out from. You can see that. And after price filled this fair value gap, what happened? Look at the pattern we had here. This is a bullish reversal pattern. This would have been a good entry on gold. After the formation of this candle, this would have been a good entry on gold. If you had bought gold from this point, your stop loss would have been at this level or a few pips below this level. Okay. And by now, you should be smiling if you are taking this trade from this point. Let's say your stop loss was 100 pips, you go for at least 200 pips. By now, you should be out of this trade on gold. You can see you should be out of this trade on gold if you were buying, if you had caught the move from this point. So if you didn't buy from this point, you can't buy from the current market price. Why? You can see that price just hit a fair value gap here also, which is at a premium. So we expect price to bounce back from this premium. You can see the pattern that formed on a 1 hour time frame after price filled this fair value gap. You can see. So there's a high probability price will pull back. You can see this fair value gap here. So if you are considering buying gold, if price does not pull back to this zone, this fair value gap, don't buy gold. If you are considering buying gold, if price does not pull back to this zone, don't buy gold. And if you want to risk buying gold without price pulling back to this zone, you have to wait for a 4-hour candle to close above this supply area. This supply area. If 4-hour candle closes above this, if there's a breakout from this zone, then you can risk buying. And if you are buying above that zone, your stop loss should be this level or this level. This is where you set your stop loss. You either use the low of this candle or the low of this candle. If price breakout from this zone. Okay, it's either price breaks out from this zone or price pulls back to this zone. These are the areas you should be considering buying gold. Okay, for now, gold is bearish. You cannot buy gold. You cannot buy gold unless you want to take unnecessary risk. You cannot buy gold. Okay, you bought earlier. If you caught the trend at its early phase, cool. Congratulations. Okay. By now, if you bought from this point, by now you should have closed partial profits. At least you should have closed 70% of whatever profit you have on gold. If you had bought from this point, let's say you have made close to 150 pips or 200 pips, you should close at least 70% of whatever profit you've made on gold. Okay. So which other? Okay, someone said we should look at BTC. Okay, we'll look at BTC. A few minutes. BTC. BTC USD. GBP JPY. Okay, GBP JPY. Mr. Allah. GBP JPY is GBP JPY. Okay, so you can see I have a trade on GBP JPY. I'm buying GBP JPY. Okay, I have a trade on GBP JPY now. I didn't go all in on GBP JPY. I went in with just this is just partial entry. Okay, because I know there's a high probability if you go down to 1 hour. Okay, so we had, you can see if you apply your Fibonacci from this swing low to this swing high, and also we had a fair value gap. That's the reason I took the trade. We had a fair value gap here. You can see this fair value gap here on what's it called? Yeah, you see this fair value gap on 1 hour time frame, and you can see this was the first attempt. Price pulled back at this point, filled the fair value gap, and I think this is the second attempt. And this second attempt was to clear the liquidity residing. They know a lot of retail traders would have bought from this point. So this second attempt, for those of you who are my students, I told you about the first attempt and the second attempt, right? So this second attempt was to come and clear the liquidity residing at this previous low, which they have achieved. And you can see where I set my stop loss. Anything that makes price breaks this support and closes below this low, then you just know that the trend has changed from buys to sell. So you don't have to be fighting the market. Take that loss. That's just it. You don't have to be fighting. Anything that makes price break this low, the low of this candle, the trend has changed from buys to sell. And that's why you see my stop loss is at this level. This is my invalidation level. So anything that makes price breaks this low, I'm out of the trade. Okay, so let's go down to 15 minutes. But I expect price to pull back. Okay, you can see what we have here. Let's go down to 5 minutes. Okay, so on 5 minutes, you can see we have a fair value gap here. I should have waited for price to pull back to fill this fair value gap. You can see what they did here was to set a trap. I see this as a trap for retail traders. This one, we had a fair value gap here. You can see this fair value gap. So that was the first attempt. This first attempt, I think I see it as a trap. This one. So they are most likely going to come and clear the liquidity residing at this low. A lot of retail traders would have jumped into buy, and their stop losses will be residing at this previous low. But below this low, you can see we have this fair value gap. So this would have been the best entry. Okay. So I'm expecting price to pull back to this zone, then so that I can add more trades. Okay. I'm expecting price to pull back to this zone so that I can add more buys. Okay, so that's my expectation on GJ. It's going to sell, most likely going to sell to this zone. Then once it gets to this zone, I'm going to take more trades on GJ. Okay, GJ is buy, and you can if you are buying GJ is most likely going to clear. You can see this highs, this relative equal highs. You can see it. It's a dangerous zone. You can see there's a high probability they will come and clear all the liquidity residing at this previous high. And above this previous high is this fair value gap. Above this previous high is this fair value gap. This is where I expect GJ to pull back to before selling. That's my position on GJ. You can see they've attempted several times. This is the first attempt, second attempt, third attempt, which I see all these highs, this previous high, I see it as a trap for retail traders. So they need to fill this gap, which they have not filled. So I expect GJ to come and fill this gap before going bearish. That's what I see playing out on GJ. And I think if you go down to weekly, even on the weekly, we still have a fair value gap here on the weekly, which GJ might also want to come and fill. But this will be my first target on GJ. You can see price has tested this level. Okay, that's tested level. We didn't fill this gap entirely, probably because of this breaker block here. That could be the reason price didn't fill this fair value gap. Okay, but I think GJ is going to come for these highs. Okay, before going bearish. I hope that is clear. I hope that is clear. Okay, so the last one will be GBP, BTC USD, BTC USD. Let me BTC USD. Okay, so BTC USD. Let me start with the weekly. From what I see here, BTC is still bullish. BTC is still bullish, but this won't be the right time to buy BTC. BTC is still bullish. It's still bullish. Price pulled back at this point. You can see what we had here. We had a fair value gap here on BTC. Price pulled back, tested that zone. You can see, and this pullback from this point could be as a result of this resistance turn support. That's the reason price didn't fill this fair value gap. That could be the reason. And you can see the candlestick pattern that formed on the weekly. This is a doji indicating a change in trend from bearish to bullish. So BTC is still very bullish, but personally, I wouldn't, if I'm to take a trade on GBP on BTC USD now, it would be a sell. I can't buy at the current market price. It doesn't make sense to buy at the current market price for BTC. It doesn't make sense. Price needs to pull back. Price needs to pull back, okay? Price needs to pull back. You can see liquidity residing at this previous high has just been swept. You can see this high, I think, yeah. Liquidity at this high, I think they've tested that level. So there's a high probability for price to pull back. So you want to wait for price to pull back to a discount area. Okay, this is, you should be considering sell or buying. If you want to buy BTC, you can see we have this fair value gap here. These are the areas you should be considering this fair value gap. These are the areas you should be considering joining the bullish trend on BTC USD. This zone, or if you still come down here also, okay, you still have this fair value gap. So it's best to buy from a discount area. You need to work with fair value gaps that discount. So this fair value gap is at a discount area. Okay, so it's best you wait for price to pull back to this zone before you buy. Buying BTC at the current market price is at a very high risk. It's at a very high risk. This is where price started going up. You can see we had an hammer here, and this next candle engulfed this hammer candle. So this is where you should have bought. This is where you should have bought. If you missed this move at this point, you had another opportunity at this point to have joined the trend, okay? Because what happened here, price pulled back to fill this fair value gap, I think, yeah, you can see. So you had another opportunity to have joined the trend at this point, but you missed. If you missed this, you also had another opportunity here. You can see what played out here. Also, price pulled back to fill this fair value gap, yeah, you can see. Price pulled back to fill this fair value gap also at this point. Can you see that? So if you miss this first opportunity, you missed second opportunity, you missed third opportunity, fourth opportunity. Why would you want to buy at the current market price? Okay, so that's my take on BTC USD. Wait for a retracement if you want to buy. Wait for a retracement. You could also look for sell opportunity. Is he on MT4 or Trading View, Mr. Ebenezer? On MT4 or Trading View, let me know. Is he on MT4 or Trading View? So guys, should I talk about on the ATR indicator or we just postpone that to tomorrow? Should I talk about it? Is there any other instrument you want me to look at? Any instrument, any other instrument I've looked at, I've analyzed all the pairs you guys mentioned. Is there any other instrument? Is there any other instrument? Okay, let me see. Let me just talk on the ATR indicator. Here's my Word document, 10:49. Still have, let's say, 11 more minutes. Let me see if I can. So the ATR indicator, I said you can use the ATR indicator, I think, for three things. Okay. What I use the ATR indicator for first is to determine if an asset will be volatile for the week or for the day. Okay, that's what I use it for, to determine volatility. I want to know if that instrument will be volatile for the day. To determine volatility, also I use it to determine my, you can use it as your stop loss. You can use it to determine where to set your stop loss and take profits. Okay, you can use it to determine where to set your stop loss and take profit. You can also use the indicator to know if an instrument is overbought or oversold. Overbought or oversold. Okay, you can also use it to determine if an instrument is overbought or oversold. And I will use GJ as an example. Now, how do you know an instrument will be volatile? How do you know? Okay, an instrument will be volatile using the ATR indicator. Now let's go to the chart. I like to be practical. Okay, so on GJ, I did my analysis yesterday and I was expecting GJ to buy. That was my analysis. So my bias for GJ is buy. I did my analysis last night. For those of my students who attended the class, I told you my bias for GJ is buy, but I was expecting price to pull back. You can see this pullback. It pulled back and it filled the fair value gap. You can see I shared that with you guys yesterday. So my bias was buy on GJ. But what happened this morning? It sold. So now let me apply the ATR indicator. ATR indicator, average range indicator. So I use the default parameters. You can change the parameters. Okay. You can change the parameters, period 14, period 15, depend on what you want. Okay. Then I just click OK. Now this 14, since I'm on a daily time frame, this 14 period means as I'm on a daily time frame, the markets, the value you see here is the average true range for the past 14 days. Okay, that period that is 14, it means average true range for the past 14 days. It means for the past 14 days, we are on daily time frame. It means for the past 14 days, the average true range for GBP/JPY is 161 pips. That's what it means. For the past 14 days, the GBP/JPY has done between 100 and 161 for the past 14 days. This is the average value. Okay, 161 pips. That's what GG has done for the past 14 days. This is average value, please. It's average value. Okay. Now, when the average, now for the weekly, let me start with the weekly. Now, first thing I want to look at is the weekly time frame to know if that instrument will be volatile for that week. If it will be volatile for that week. Now you can see the value we have here. This is 382 pips. 382 pips. This tells me that instrument, that GJ, will be volatile this week because the average true range on the weekly time frame is 382 pips. 382 pips. That tells me that GBP/JPY this week will be very volatile. It will be very volatile. And if I am a swing trader, if I'm using the weekly time frame for my analysis, if I'm a swing trader, it means if I'm going to take a trade on GJ this week, I could be aiming for 300, at least 300 pips. that will be my TP. So if my bias, now this indicator, this ATR indicator, you don't use it to define the trend of the market. You don't use the ATR indicator to define the trend of the market. You only use it to know if that instrument will be volatile for that week or for the day. Okay? You use it to know if the instrument will be volatile for that week or the day. You don't use ATR to know the trend. It tells me that GBP JPY will be very volatile this week. Okay, so now apply my technical tools or whatever strategy I'm using to know the trend. Once I know the trend, for example, let's say my bias for GBP JPY this week is buy. I will look for the buy setup. Once I see the buy setup, my TP, I could aim for at least 300 pips. 300 pips on GBP JPY. That will be my target as a swing trader. Okay, as a swing trader. Now, as a day trader, if you're a day trader, you work with the daily time frame. You want to know the average true range for the day on a daily time frame, which is 161 pips. So any day I'm taking a trade, since my bias for the week on GJ is buy. Okay, anytime I'm taking a trade on GJ, anytime I'm buying GJ, my target for the day would be between 100 and 160 pips. My target for the day will be between 100 and 160 pips. You can see the value here. This is 161 pips. So my target for that day will be 161 pips. I hope that is clear. So like I did my analysis yesterday, I was expecting GJ to buy. So today my target should be between 100 and 161 pips. Are you with me? Now this morning, what happened this morning? GJ sold, right? GJ sold. And how many pips from this point? Let's say from this point to this point, you can see GJ did, you can see what he did. This is about 165 pips. This is what 165 pips. And what is the average daily average true range for the day? 161. You can see it has exceeded the average true range for the day. I hope you guys are following. I hope you are following. It has exceeded the average true range for the day. That tells me that GBP JPY is oversold. Are you getting me? That tells me that GBP JPY is oversold because it has exceeded the average true range for the day. I hope you're getting me. So selling GBP JPY after it has exceeded or it has hit the average true range for the day is at a very high risk. It will not make sense for you to now start selling. Are you getting me? So that is how you can use the indicator to also know if it is overbought or oversold. So it is oversold now. And for those of us who are considering buying, this will be the right time for us to buy because it has oversold. Are you getting me? But you need to look out for your patterns. You need to look out for your setup before you now start buying. Are you getting me? Are you guys getting me? Are you still here? Are you still here? Can you hear me? Can you hear me? Can you hear me? Can you hear me? So that is how I use the ATR indicator to determine volatility for the day. So for today's market, 161 pips. If you are buying, you should be aiming for at least 100 pips. 100 pips. Like this trade I took on GJ, what is my stop? What is my risk on this trade? What is my risk on this trade? I think it's just like 50 pips. Yeah, it's just like 50 pips. 50 pips, and I'm aiming for, yeah, it's about 50 pips, and I'm aiming for at least 100 pips. Okay, I'm aiming for 100 pips at least. It might come clear the liquidity. So my target on this trade is at least 100 pips. 100 pips. Okay, so let's assume I woke up in the morning and the market has bought. It has done over 161 pips. It means it has overbought, right? If I woke up this morning and the market has bought and it has done over 161 pips, that means it has overbought. I cannot buy again. If I decide I want to buy, if I still insist on buying, price needs to pull back. There has to be some sells before I would now consider buying. I hope that is clear. That is how I use the ATR indicator to determine the, what's it called? To determine if the instrument will be volatile. Anything below 100, if it is below 100, the volatility will not be much. Let's say it's between 70 and 80. That tells me that the volatility on that instrument will not be much, will not be high. That's what it tells me. Anything below 50, below 50, that is low volatility. That is low volatility. Olapeju, like I said, you don't use the ATR indicator for entry. You have your strategy. Your strategy is your strategy that will tell you the right time to buy. Okay, you don't use this to know when to buy or when to sell. Okay, your entry, it's your strategy that tells you this is the time to buy, not the ATR indicator. I hope that is clear. Okay, I hope that is clear. So if I had woke up this morning and it has already bought 160 something pips, that tells me it's overbought. Then I have to wait. If I insist on buying, I have to wait for price to retrace back to maybe a discount area. At least there should be a little retracement, even though it's 50% retracement. Then I can go in and take the risk. Are you getting me? So that is how I use the ATR indicator. Now, for using how to use this as take profit, like I said, I just shared with you guys. So for today is 161. So my take profit for today, once I see my buy setup, like we had this hammer here, this hammer candle. Okay, this tells me it's time to buy, right? The hammer tells me it's time to buy. So if I buy, since I know that the average, what's it called? The average true range for the day is 160, then I should be aiming for my 100 pips. That should be my TP for the day. 100 pips, 120 pips, 150 pips. Are you getting it? But there's a high probability that once the market is getting to 150 or 140, most traders, the institutions want to sell. So you don't want to hold that trade until it gets to 160 or 150. It should be out before it gets to that level. Because once it gets to that level, there's a high probability that they will dump it. Most institutions will sell. Most retail traders would also sell. So you don't want to wait for it to get to 160. Get out before it gets to that average range value for that day. I hope that is clear. So that is how I use that to determine my take profit. Then for stop loss, you can use 4-hour value as your stop loss. You can see the 4-hour value is 51. Okay, 4-hour value is 51. So your stop loss can just be 50 pips. Your stop loss can just be 50 pips. Once you see your buy setup, you see your pattern, it's time to buy, and you go down to 4-hour. That's if you are using the daily true range, or even though if you are using the weekly, if you are a swing trader, you are working with the weekly time frame, you can always use the average true range on the 4-hour time frame as your stop loss. 51. This is 51. Okay, so you can see I told you guys I use 50 pips. I didn't even check this before setting my stop loss. I just knew that once price breaks this low, it's time to exit the trade. I just knew, okay, 50 pips. So you can see it here. You can see it. So you can just use 50 pips as stop loss. Sometimes what I do is I will just check 4-hour average true range, check 1-hour average true range. You can see what we have here. This is 30 pips. Then I go to 4-hour, 50 pips or 51 pips. I just had 51 plus 30 pips and I get the average value. 51 plus 30 pips, that is about 81. 81 divided 2, that's about 40 pips. I can decide to just use 40 or 45 pips as my stop loss for that day. I hope that is clear. So that is how I use the ATR indicator. Determine if that instrument will be volatile for that day. My stop loss and take profit, I've shared that with you, how I use it. Then overbought or oversold. Once the market has traded above the average range for the day, is overbought. If it has sold below the average range for the day or sold above the average range for the day, that is oversold. Then I should be looking for buy opportunity. It's that simple. Any question on this? Any question on this? Let me know. Please, if you are here to give the video a thumbs up, please give it a thumbs up. Give it a thumbs up. Do you have any question on ATR? Let me know. Let me know. Let me take your questions on ATR before we end the session. Do you have any question on ATR? Rotesco, if we are looking for buys on GJ, you should also look for buys on CAD JPY because they are positively correlated. If you are buying GJ, then you should look for buys on CAD JPY because they are positively correlated. Any question? Any question? Let me take your questions before we end today's session. If you have any question, let me know. Let me know. Let me know. If you have any question on volatility, average range indicator, let me know. 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 Any question, any question? Please ask questions, ask questions. Like I said, you don't use ATR indicator to determine the trend of the market. You have your strategy. It is your strategy that you would use in determining the trend of the market. Your strategy tells you when to buy or sell. If you don't have a strategy, then you should get my strategy. You should get my strategy. You should learn my strategy. Okay, I have a course on that. Okay, I also offer mentorship. So if you don't have a strategy, you enroll for mentorship. You can get my course. Okay, so it will be available. The replay will be available on YouTube. Okay, the same link you use in joining this meeting. Just click on that link. You would have access to the replay after the class. Okay, you have access to the replay after the class. The ATR default settings here, that's what I use because I don't have the time to now be testing different parameters. Okay, that is what I use. That is if I want to use it. Like I said, I don't use it. I just know when market is overbought. I'm a price action trader. But for those of you who are new, who are confused as to where to set your stop loss or your take profit, you are confused, okay, and you want to know if the instrument is volatile, will be volatile for that day, okay, so this indicator is good for you. You can use this indicator, okay. uh okay, the default settings, just once you select ATR indicator, now you might not see it here, okay. I think it's because I've selected it in the past, that's why you have it here. You go to trend, okay, so it's under this trend. You would see average true range, I think. No, it's not on that trend. I think under oscillators. Yeah, you can see it. It's because I've selected it. That's why it's displaying here. Okay, it's because I've selected it in the past. So for you, your first time, you need to go to oscillators, then average true range indicator. Okay, so that's it. Just click and just click OK. If you want to change the color, you can change the color. If you want to increase the width, okay, the thickness, you can also increase the thickness of the line. Okay, so it's left for you. So if you want to be testing, you can just be changing the parameters. You can change to 15, change to 20, change to. But I've back tested this 14 period, and I'm okay with it. Okay, I'm okay with this 14 period. Okay, so that's it, and just click OK. Okay. Send me a message on WhatsApp, please. Send me a message on WhatsApp. Send me a message on WhatsApp if you're interested in mentorship. Send me a message on WhatsApp. Okay? Send me a message on WhatsApp. Protesco, do you have my WhatsApp number? Do you have my WhatsApp number? Send me a message on WhatsApp. My number is 080 378 36189. I repeat, 080 378 36189. Okay? I just shared the settings. Just use the default settings. If you are a statistician or you are a mathematician like me, you can go ahead and start testing different parameters, different period. But I'm okay with that 14. Okay, I'm okay with 14 period. So just work with that. Unless you want to develop your own strategy, your own tool, then you can now do some more research on that. Okay, you can also go on Google to do more research on volatility on average range indicator. Go to Google, go to YouTube. Okay, there are a lot of videos on about it, but the way I use it is different from the way some other people use their the ATR indicator. Okay, the way I use it, my approach is different. It's different. Every strategy that I trade with, my approach is just unique. I spend time on the chart and I make a lot of new discoveries. So anything I'm teaching in my class is unique. You can't find it on the internet. But you can also go and see how others go to YouTube and watch how others use the indicator. Every of my strategy is unique. I don't teach what you can find on the internet. I don't teach it. Very unique. Okay, so that will be all for today's session. I think there are no more questions. Any question? Any question? Any question? Let me take a question in the next 2 minutes before I end the session. Any question? Do you have any question? Any question? Any question? Please give the video a thumbs up if you haven't done that. Give the video a thumbs up. Give it a thumbs up. Give it a thumbs up. And if it's your first time participating on the live stream, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. I want to appreciate every one of you. I appreciate every one of you for your participation. Mr. Badamosi, Mr. Samson, Mr. Debayo, Mr. Joseph, Mr. Emmanuel, Mr. Joro Boy, Mr. Ola, Mr. Ola, Mr. Ebenezer. I appreciate every one of you for your participation. I wish you all a profitable trading day. Please always use stop loss. Please use stop loss. Use stop loss. No matter how good the setup looks like, the trade, the market can do otherwise. And always risk what you can afford to lose. Always risk what you can afford to lose. If it is $1 you are comfortable risking in a day, if it is $1 you are comfortable risking in a day, develop a strategy that will not allow you to risk more than $1 in a day. Okay, if it is $1, if it is $1 you are risking and the account you are currently trading, the minimum lot size you can trade is 0.01, and your strategy, let's say your strategy, the market risk, the minimum market risk is 30 pips, and you are using 0.01, you know, with that strategy, you cannot risk $1 if the minimum lot size is 0.01. So if you are using 30 pips as your stop loss, every time the market goes against you, you are going to risk $3. And that $3 might be too high for you. Maybe the risk is too high for you. $3 is about close to 7,000 naira. Am I correct? Close to 7,000. And some of you, I don't think you earn up to that on a daily basis. I don't think you earn up to that on a daily basis. Okay. So if that risk is too high, go for set account. Go open a set account that will permit you. So for example, if you open a set account and you trade with 0. If the risk is 30 pips and you trade with 0.5, that will be 1.5. Then you trade with 0.4, that will be 1.2. You can decide to trade with 0.3 lot size on a set account. So that if the trade goes against you, you will not lose more than $1 on that trade. Trade with the risk you are comfortable with. I hope that is clear. Trade with the risk you are comfortable with. Okay, so I appreciate you all and I wish you all a profitable trading day. Bye for now.